Assalamualaikum warahmatullahi wabarakatuh. Alhamdulillahi rabbil alamin. Assalatu wassalamu ala rasulillah. Everyone, welcome back to our Sada education series. I have been away for quite some time, but this time we do hope we can further continue with our deliberation on issues and challenges in the Islamic banking sector. Before that, I would like to take this opportunity to say Eid Mubarak. I think tomorrow will be 1st of Shawwal, so we have been fasting in the month of Ramadan ever since, and alhamdulillah, we do hope that the muhasabah, the training that we go through the month of Ramadan, will make us a stronger Muslim in order to live our life based on Islam as a deen, Islam as a way of life. So likewise, when we are looking at our businesses, our daily life, we should be able to see that these are ibadah. These are acts of worship. And likewise, when the issue of Islamic banking and the risk-taking behavior in banking, or the risk-bearing behavior in banking that is using al-bay as opposed to riba, the taking of risk or the bearing of risk, in fact, is an act of ibadah, because the fact that we are risking our capital in the trading business, meaning that the outcome of the trading business, the sale that we are trying to make, there is no guarantee that we can sell at the expected price. So sometimes we are able to make profit, but sometimes we have to sell below cost and we make losses. So this uncertainty in the business outcome will be risking our capital. It will place our capital in jeopardy. So it is indeed an act of ibadah to follow Allah's commandment, that is to use our capital in trading or in sale instead of making loan with riba. So today, what I'm trying to do here is to further look at risk-taking behavior, because we tend to say that the conventional bank does not take risk, in view of the fact that the riba contract or the interest-bearing loan contract have guaranteed a fixed return for the bank plus the capital recovery. So the loan contract will tell us that from the loan there will be a debt created comprising of the loan plus interest, and the contract of loan will guarantee that the bank will get full repayment of their loan plus interest. So as if when this loan contract has been provided the bank the legal claim on the debt, as if there is no risk-taking involved in the bank, because they know in advance what they will receive as specified by the interest-bearing loan contract terms. So, for example, for a secured loan, meaning that a loan with collateral and guarantor, a loan facility of, let's say, $100,000, where the loan rate is at 5%, and this loan rate of 5% will consist of two components. One will be the cost of fund, and that will be the OPR, the overnight policy rate for Malaysia, 3%. For UK, it is the LIBOR, for example. And Another 2% will be the credit spread, that is the additional interest rate charged based on the credit risk or the default risk. So 3 plus 2 is equal to 5%. So with the tenure of 5 years, we can see that the interest charge on this facility will be $25,000. That is $100,000 times 5% times 5 years, 25,000. So the debt created from the loan with interest of 5% a year over 5 years would be the loan size plus the interest, that is $100,000 plus $25,000, that will be $125,000. So the debt obligation of the borrower is $125K with monthly payment at $2083.3. So this is basically the credit terms from this interest-bearing loan contract. So meaning that when we look at the statement, meaning that when we see that the loan facility created a debt obligation of $125,000, which is a legal claim the bank can make, from this loan business, it is as if that the bank is able to make a profit of $25,000 plus capital recovery without any risk, since it is a legal claim and the bank can basically go to court to claim this money if the borrower are not able to perform their payment over time. Right? So, however, this statement may be somewhat misleading, as I say, as conventional bank also engage in risk-taking. So it looks as if when the bank makes profit and capital recovery specified in the loan contract as a legal claim, as if there is no risk-taking. However, this is not true because extensive academic literature examine risk-taking behavior in conventional banking. So we have to understand what is the meaning of risk-taking behavior in the riba bank with respect to the risk-taking behavior in Islamic banking. So this is the issue that I'm trying to raise here today. But this academic literature, they do not actually look at the loan contract per se, but they look at how risk and reward are managed in the banking business. So we can see some of the paper listed here, risk-taking, bank governance, regulation and risk-taking, risk-taking channel of monetary policy, executive compensation and risk-taking, right? Bank capital and risk-taking. How bank capital affect risk-taking? So it is as if these papers are trying to explain what are the factors affecting bank risk-taking behavior. If you look at the other scenario where the bank makes loan without collateral, and these are unsecured loans, so given the same loan facility of $100,000, the interest rate is no longer at 5%, it is raised to 20% because it's no longer secured. So it is a risky loan. And we can say that now the component of the interest rate will be 3% OPR plus 70% credit spread. So the default spread has been raised from 2% to 70% because the loan is unsecured. And with a tenure of 5 years, the interest payment is $100,000. $100,000 times 20% times 5, and the debt created from the loan facility is now $200,000. $100,000 loan facility plus $100,000 of interest income, and the debt obligation is $200,000, which is higher than the earlier amount, and with monthly payment also higher at $333.3. So we can see that the idea of the risk-taking behavior in banking is quite different from the Islamic conception of risk-taking, because in the conventional bank risk-taking behavior, we are looking at this, trade-off between risk and reward. So more risk, more credit spread, more profit. So in order for the bank to make more profit, they have to make riskier loan, because riskier loan can charge higher interest rate. So the more the risk, the higher credit spread the bank can charge, and the more profit the bank is able to make. Likewise, if the bank is less aggressive, they give a lot of secured loans, and secured loan give the bank lower credit spread and therefore lower profit. So that is why we can see earlier that there are a lot of research trying to find out what are the factors determining the above risk behavior. So the risk behavior here is not about ownership risk-taking as we see in Islamic bank. It is about making more profit by becoming more aggressive in the lending behavior. So to make more profit, the bank will have to give more risky loan, because the riskier the loan, the higher interest the bank can charge from the credit spread, and vice versa. So this is a very important context, so that we will not be confused between conventional risk-taking behavior and the Islamic risk-taking behavior, which we will further look at in the coming discussion. Of course, when we look at much more papers, that describe the factor affecting the bank risk-taking behavior. The bank risk-taking behavior is still about the charging of more profit from a riskier loan, or the charging of less profit from a less risky loan. So that is what we meant by bank risk-taking behavior, and that is why we see a researcher trying to understand what causes bank, to be basically indulge in this kind of risk-taking behavior. That is, to make more profit, the bank must make more risky loan so that they can charge higher interest rate. Okay, guys, we can just just scroll down and see what are the issues here, and we can see in general. We can say that this article explores various aspects of bank risk-taking behavior, including the effects of capital structure. So how capital structure affect bank risk-taking behavior? How governance affect bank risk-taking behavior? How regulation, charter value, accounting practices affect risk-taking behavior? So risk-taking behavior here is not about the taking of ownership risk or the taking of business risk, as we are trying to infer in Islamic banking, but it is about, as I said earlier, the making of risky loan in order to make more profit, and that is made possible by the charging of higher credit risk premium. Okay, guys, we can stop here, then we will continue in the next discussion. Thank you. Assalamualaikum warahmatullahi wabarakatuh.